Hi, and welcome to the channel. My name is John Pena with Pena El Paso Realty Group, and in this episode, we're going to talk about 3 big challenges that we are seeing in the El Paso real estate market. And let's cut the fluff and let's just jump right into it. Number 1, and these are going to be probably no big surprise, but number 1 is affordability. So I've got some pretty epic graphs here, I think, but in a nutshell, as you probably know, homes are not affordable anymore. Why? Because home prices have increased so dramatically. And so let's kind of jump in this and take a look at this first graph. So basically, home prices have been growing and they've been outpacing wage growth, right? So it's one thing if your wages are going up and houses are going up, fine, no problem. But when house prices go up or any other thing, groceries, gas go up and your wages don't go up, obviously that's a problem. So as you can see from this graph below, in 2020, home prices spiked pretty dramatically, almost about 30%. This obviously made it very challenging for buyers to save up money for down payments and things like this. Now at the same time, in 2020, as we all know with COVID, interest rates were really, really low, and so many people could get approved for a home loan. It really added a lot of fuel to the market, and you can see home prices pretty much skyrocketed. And so I think the graph is pretty interesting. You know, home prices for the most part kind of have gradually increased for the first part of the graph, but then once you hit 2020, you can see that median home price was about 300, this is nationwide, was about 320,000, and within just a couple years, it spiked up to 480, and now it has come down to 420. And so homes, I mean, it's very fair to say, are not affordable. And this next graph is actually just home price appreciation just in El Paso. I love this one. So this is just looking back over the last 5 years. You can see that 2019, the average home price was just over $150,000. Now we're basically around $250,000. When I kind of came on the scene in real estate in El Paso, it was 2020, and the median sales price was about $165,000. And even in the short amount of time that I've been here doing this, home prices have gone from 160 all the way up to 250. And so that's a pretty significant change. Again, this idea that homes are not affordable is a pretty big challenge in our market right now. This next one, this is a graph by Redfin. This one's super important too. So affordability. Basically, right now, 2022, last year, and it really hasn't gotten much better, basically 1 in 5 homes was considered affordable. What does affordable mean? Basically, a listing is considered affordable if the estimated monthly mortgage payment is no more than 30% of the local county's median income, okay? So last year, only 1 in 5 homes were considered affordable. Just in 2021, at least 2 in 5 were considered affordable. And in 2013, basically 1 of 2 homes, or 5 out of 10. So we've gone from 2013, where basically half of the homes for sale were considered affordable, to 2021, where 2 in 5 were affordable, to last year, where they're saying now 1 in 5 homes is affordable. So home affordability, certainly not ideal, which takes us to our next big challenge, which again, no shocker here, higher interest rates. And you know, when COVID hit, the government, you know, had to do what they had to do. And one of the things that happened is that interest rates were really, really low. You can see from this graph here, I love this graph too. I'm not a big graph numbers dork, but this one's pretty interesting. This looks back at kind of average mortgage rates over the last 50 or so years. But as we all know, 2020, interest rates dropped to around 3%. And you know, my interest rate was 2.75. I've heard of other people getting 2.5%, things like that. However, in the last couple of years, we know, what if we had inflation, which has caused the Feds to raise interest rates. So in the span of a couple years, essentially, we've gone from 3% interest rates, and now we're hovering around 7 to 7.5% interest rates. Now, in the scheme of things, if you look at this graph, this isn't all that abnormal. Like early 1980s, you know, now there was a recession, a big problem at this time, but at the same time, interest rates were up at 18.5%, which is unheard of now. For the last 10 years or so, we've been at or below 5%, but now we're well above that at 7.5%. What happens basically when interest rates are higher, it makes it much more difficult for buyers to get qualified for home loans, and if they can get qualified for a home loan, that higher interest rate essentially decreases their purchasing power, so they can't afford as much home as they could when the interest rates were lower. So this is certainly a problem. And let's wrap up with this third problem, and this one isn't as significant, I think, as the first two, but it's still an issue, and that is the limited supply of homes for sale. So despite the population growth in El Paso and our country in general, there simply aren't enough homes for sale. So what happens is that when supply is really, really low, even if demand is low, which it is, it still makes it challenging, and that low supply puts kind of upward pressure on that affordability, because if there's only so many houses for sale, it keeps the prices at that inflated price, which is exactly what we're seeing here. If you take a look at this one, this is pretty amazing. So the dark line is essentially housing supply, and then that dashed line is actually the home prices and changes. You can see that where we're at right now, essentially, we've got high prices and low supply. Now, if you go back and look at around 2008, 2009, during the Great Recession, the big housing bubble, it was the exact opposite. We had a high supply of homes because so many people ended up defaulting on their mortgages and having to sell their homes, which then, of course, made prices go much lower. Now, I'm not saying that we're having a housing crash, all right? I've said this a million times, but it is interesting to point out that where we are right now with kind of high prices, low supply, it does kind of correlate to 2005, 2006. There was the same kind of dynamic at play where prices were higher and inventory was lower. And so again, I'm not saying that we're having a housing crash, but I am saying that a housing correction is happening. And so a couple of factors maybe why there aren't a ton of homes. One is because investors bought up a ton of homes during this last kind of COVID era home bust, so to speak. Investors picked up a lot of homes, okay, which basically took those homes off the market for regular buyers, right? Said these investors accounted for more than 13% of real estate purchases in 2021 alone. And so that basically, zaps the supply of homes for just regular buyers. Another issue with supply is that new home builds aren't keeping pace with population growth. So I've said this before too, but sometimes people think, well, if there aren't enough homes, why don't builders just go crazy and build a bunch of homes and then make a lot of money? The problem is that builders are tentative to build a lot of homes when the economy is uncertain, and let's be honest, the economy is very uncertain. We're in the midst perhaps of a recession or about to fall into one. And so when you combine that with labor costs, material costs, builders aren't basically picking up the slack. So supply is going to basically be an issue for a while here. So those are the three big issues that we're seeing in the housing market, not just in El Paso, but this is basically for most of the country. Homes are not affordable, which makes it challenging for buyers to, of course, purchase them. Interest rates are high, which of course makes it challenging for buyers to purchase them. And those higher interest rates are contributing to what we call rate-locked sellers, meaning if you have an interest rate of like 3%, why would you sell your home now if you don't have to, and then go buy another home with an interest rate of 7 or 7.5%. So it's making sellers just basically kind of stay put unless they absolutely have to sell. And then that third point is there's just not a big supply of homes. So it's a pretty interesting situation. We do kind of, I talk about this some, real estate's a roller coaster. And by that I mean it's kind of up and down, right? It's a very cyclical market. And so I think it's fair to say that we're definitely in a down market right now. In our next episode, Alex and I are actually going to do a live episode in another week or so, and we're going to talk about what we think is going to happen and predict a couple of different scenarios that might happen. So by all means, keep an eye out for that. But I hope this information has been useful to you. If you follow the economy and the real estate market, this won't be anything shocking for you. But I do think that sometimes just talking about it, showing the graphs, helps people understand the market a little bit better. That's what we're here to kind of help you do. Of course, we want to help you buy and purchase homes if that's right for you and your family. But at the same time, if it isn't right for you and your family right now, I think it's just good practice just to make sure that you're aware of what's going on in the market. So, thank you so much. We'll see you in the next episode.